So that is the formula. That is the formula. So I'd like us to look at a question here. Already, it's my expectation that everyone is able to access all the past paper. In fact, you can see that we have the past paper from 2015 to 2023, and the link is attached. The link is attached in our WhatsApp group description. So just check from May 2021, question 1, May 2021, question 1. Then, question 1B. Okay. So I'm seeing something here. So you just share the screenshot of the same. So I hope that you're able to look at it. So the question is that Nyakati Limited. Okay, part A, hiyo nitawapatia kama assignment. Part A, explain 4 categories of capital investments, having in mind that on Friday we're not having a financial management class, as we said. So part of the assignment, andika mahali. Part A, explain 4 categories of capital investment projects. I know that is hiyo ni mswaki kwenu kabisa. Hiyo ni mswaki kwenu. So tumeanza kutengeneza assignment ya from now kwenda hadi weekend. Sawa. So Nyakati Limited intends to invest in a 4-year mini project whose initial outlay is 32 million. The project is expected to generate the following cash flow at the end of each year. So this project is expected to generate the cash flow at the end of each year. At the end of each year, we have year 1 to 4. Then we are given the cash flow. They are 30 eliminated. The cost of capital is 12%. Ignore taxation. Advise the management on whether to undertake the project using the initial rate of the return, IRR method. Internal rate of return, not initial. Internal rate of return. So that is the question. First of all, are we together? Are we together up to that point? We together? Pamoja hadi hapo. Someone tell me whether we together. We're together. Right, thank you so much. So we want to solve the question solution so that you are able to advise this company, Nyakati Limited. So the first thing that I can see here, that I have here, 1, 2, 3, 4. Then there are some cash flow being generated at the end of each year. Some cash flow being generated at the end of each year. At the end of each year, we have some cash flow. Therefore, we're able to look at what we have. The cash flow that we have here is cash flow that we have here is, the first one is 12,000, 15,000, 9,000, 6,000. You can see that. Hope you can see that. 12,000. Or why can't we arrange them in a vertical manner? Why can't we arrange them in a vertical manner so that we are able to discount this? Can discount to get the present value. It depends. 1, 2, 3, 4. And remember, shillings are in thousand cash flows. Cash flow for year 1, we have 12,000. Year 2, 15,000. Year 3, we have 9,000. Year 4, we have 6,000. 6,000. So we get the, first of all, tell me, which type of cash flow are these? Regular or irregular? Which type of cash flow are these? Regular or irregular? Remember, for them to compute IRR, we are comparing this with or equating this with 0. Irregular cash flow, therefore, we use PV 12%. PV 12%. You can use a table or a calculator So the formula for PV is 1 plus R raised power negative N. Hii hufai kusahau hii. Hata ile ingine ya PV hufai kusahau tafadhali. So give me this for the first year. For the first year, what will be our PV 12%? First 1 year, PV 12% 1 year. Inakuwa ngapi? Inakuwa ngapi? I showed you how to use the table. I showed you how to use a calculator. The calculator, you insert, you plug in the formula 1 plus R is power negative. And for instance, in our case, R is 12%. Therefore, I'll be having 1.12 raised power negative 1 for the first period, who is giving us something. And for the table, I told you for the table which is found at the end of every financial management paper, there are some rates here. There are some rates here, and at the row we have some rates, and then we have years in the column under the column years under the column. So you check if you're dealing with 12% here, just come here to year 1. The intersection is what you read. Thank you very much. Class is giving us 89, 0.8929, 0.8929. That is very good. Then 0.7972, 0.7972. We're doing great. What about the third one? The third one in GAPI, 7118, 0.7118. If you use a table, if you use a formula, you get the same thing. Remember, for the formula, you have to convert to whole decimal places. What about the last one? The last one, 0.6355. Thank you so much. 6355. This is very interesting and very easy. I want you to understand how we come up with IRR. We said that IRR is a concept that convert cash flow NPV into zero, or negative. It converts NPV into 0 or negative. Therefore, the first thing that we want to identify is the NPV. These are our discounted cash flow. Discounted cash flow hapa, just multiply, and then we get total present value. These are also called present values, present value kwanza for each year. So give me the first one. The first one, just pick the 12,000 times the PV of 12% 1 year. Unapata ngapi? Pewe ya kwanza pale. We would like to get the first one. That is 12,000 times 0.89. 29. Let's engage our calculator very fast. So that we're able to understand these concepts. 10, 7, 14.8. Thank you so much. 10, 7, 14.8. 10, 7, 14.8. Thank you so much, Miri Sarome. Let's move to the next one. Ya pili itakuwa ngapi? Ya pili itakuwa ngapi? 13,393.5. 13,393.5. 13,393.5. 13,393.5. 13,393. I hope that everyone is getting that. Sorry. So that means a problem. That means there's a problem there. And that's why I like everyone to be giving their answer. What you are getting is very important for us. It's very important. Just taking 15,000 times 0.7972. Unapata ngapi? 11,958. Go with 11,958. Thank you so much. Thank you so much. Move to the next one. Twende kwa hiyo ingine tuone tunapata nini. Twende kwa hiyo ingine tuone tunapata nini. How much are we getting for the next one? How much are we getting for the next one? Let's engage our calculator. 9,000 times 0.71, 18. 6402.2. 6402.2. Cause this 0.0. Okay. All right. We're almost there. We're almost there. Then we begin then 3813. 3813. 3813. That is very good. Let's get the total. Total discounted cash flow. Total of these. Total of all these. Add. Tapata ngapi? What will be the total? The total. Remember our rates are 430 eliminated. How much are you getting? Yeah. But hiyo total hapo. That not 64, but 6406. This 6406. Thank you so much. 6406. 6406. Thank you so much for that correction. Thank you so much. $23,192. We're getting different answers here. I want to see some people giving us some answers. Keras amepata yake, tupate mwingine. Hizi kuwa itakuwa hivyo kweli. Hiyo already ni 6,000 Keras. Keras kuna kitu umeacha. Salome, kuna kitu mnaacha. Mimi nikiangalia hii ni 10, hii ni 11, hii ni 6, hii ni 3. Hapana. Kwani mnatoa? Are you subtracting? Hii ni 10,714.8. Then this is 11,000. That's already 21,000. Keras, amjaongeza 3,000 mahali. I don't know. Can you check? Check. Compute, calculate. Hapo wanatupatia 32,879. 32,879. Sasa nataka mtu wa pili ili tusonge mbele. Kwa sababu unaona watu wote wako na tofauti. Can you engage your calculator? Pole. Bila haraka. 10,714.8. Thank you. 32,892. 32,892. Remember, our figure is under 30 eliminated. Now, can we get the NPV? NPV at lower rate. NPV at lower rate. Remember, our rate is 12%. We are calling it lower rate because already next rate we shall be looking at a higher rate so that we're able to get a negative NPV or 0. So NPV, to get NPV, is we get our present value, total present value, 32,892. 32,892 minus 32,892 minus. Utatoa nini? Utatoa nini? Because the formula of getting NPV, present value minus initial outlay. Now, somebody to give us the initial outlay provided in the question. What is our initial outlay as provided by the examiner? Just read the question again. Of Nyakati Limited. Of Nyakati Limited. What is the initial outlay? What is the initial outlay? Mary is giving us 32,000. 32,000. Of course, that is the correct figure. 32,000. 30 eliminated. So my NPV will be 892. 892. First, there's something I want to show you here that you see already now we have NPV of the lower rate. And already we know our lower rate. Lower rate is 12%. See? Lower rate, 12%. Whatever that we are remaining with is how do we get higher rate? How do we get higher rate? How do we get another NPV? And the NPV that now we ought to get, we use a trial and error method to get an NPV. And are we expecting a positive NPV now or a negative NPV? That's a very nice question. Are we expecting a positive NPV or a negative NPV? Let me hear from you people. Are we expecting a positive one or a negative?
Negative.
Yes. Yes. Thank you so much. Thank you so much. Thank you so much. We are expecting a negative NPV. And for us to compute that, we use trial and error method. Trial and error method in order to obtain a negative or zero. Negative from the rules that I gave you, the steps. You see that if we have a positive here, now we have to find a negative NPV. Now for that, which rate do you think we can pick? Here you guess the rate. You guess the rate. Already we had 12% given by the examiner, and that one we can term it as the lower rate because already it has given us a positive NPV. This rate, 12%, it has given us a positive NPV. Now we want to choose a rate that probably will give us a negative NPV. Which rate do you think we can pick? You can maybe guess through a chart or such. So, which rate do you think we can take? Ila tutachukua rate gani? Tutachukua rate gani? Haya, watu wewe Keras ameamua tuchukue 70, 30, 20. Aha. All right, good. In most cases, when you are computing any question to do with IRR, when choosing the rate, you can double the rate given by the examiner. You can double it. All let it be close to double. Good. Let's move with 20. You can move with 20 or we double it. Let's double it. We use 20. The rate was 12%. The rate was 12%. You can use 24 or use maybe 20. Let's use 20. Use 20 as the higher rate. Use 20% as the higher rate. Great. Now we shall repeat the process of computing the NPV because we want to see whether we shall get the negative NPV. So here 1, 2, 3, 4. Then cash flow Z2 30 eliminated. Still the same 12,000, 15,000, 9,000, 6,000. Great. Then we move here to our PV 20%. Give me the first one now. PV ya kwanza ni ngapi? PV ya kwanza ni ngapi? It will be 1.2 raised to power negative 1. Ama uangalie table direct. Haya, tupate ya kwanza. Let's get the first one. Let's get the first one. Let's get the first one. Hakuwa ngapi? Haya. 0.8333. 0.8333. Thank you so much. What about the second one? What about the second one? What about the second one? Ya pili ni ngapi? 69.44. 69.44. 69.44. That is very good. That is very good. You're doing well. What about the third? 57.87. 57.87. 57.87. Na hii difference imekuwa kubwa sana ama iko tu sawa? Tunaangalia unaona sawa. Let's move to the next one, the last one. I hope ya 2 years ni hiyo. 48.23. I've seen the pattern. 0.48. I've seen the pattern now. 23. Range kubwa, range kubwa. Sawa. So nyingine inaweza kuwa inakaribiana hapa. Haya. Then we get the discounted cash flow. Discounted cash flow. So year 1 tunapata 12,000 times 0.8333 ni ngapi? Discounted cash flow zetu sasa. Discounted cash flow zetu ni ngapi? Tupate ya mwaka ya kwanza 9999.6. 99.6. Thank you so much. What about the second one? Thank you so much, Keras. So much. Haya, tusonge tena. 10,416.67. 10,416.67. 10,416.67. All right. All right. The third one, where our readies, our readies wako wapi? That is very nice. That is very nice. It's very nice. 5808.3. 5808.3. The last one, but not the least. The last one, but not the least. Tutapata ngapi? Tutapata ngapi pale? We are almost there. This is very interesting. This is very, very interesting. Ya mwisho sasa. Ya mwisho sasa. Tunapata 2893.8. 2893.8. I want you people to see what is happening here. You see, the higher the cost of capital, the lower the discounted. Year 3 ni 58. Oh, okay, Salome, thank you. Thank you so much. Anatuambia year 3 ni 5208. Can everyone confirm that? Can everyone confirm that? 5208.3. 52, not 58. I mean, that is very good. You have been of great help to all of us. All of us. All of us. Thank you so much. Now give me the total present value here. What is our total? Thank you so much. Thank you so much. Ni vizuri unaifanya. Ifanye mwenyewe kabisa. wewe usiende na figa zenye, unajua mimi naenda na figa zenye mnanipatia. So just do it. Uifanye kama venye ungeifanya kwa mtihani. Sawa? Patie totals. Toto itakuwa ngapi? Toto itakuwa ngapi tafadhali? Toto itakuwa ngapi? Tunangoja toto sasa. Aha. 28,518 points. Matter of point, 28,518.37. 28,518.27. 37. 37. Sawa. Now let's get the NPB. NPB will be equal to present value 28,518.37 minus 32,000. This is very interesting. Very interesting concept. Very interesting concept. Unapata ngapi? Unapata ngapi kama our net present value? Net present value. Of course, tumeigonga kabisa. Naona inapatia negative where we wanted. We wanted to get a negative. That is very, very good. Ukicompute ukute haijakupatia negative, you repeat, you try a higher cost of capital, a very higher cost of capital, 3481.63, 3481.63, which is a negative. That really work for me. That really work for me. Now I have everything. I have the higher rate. I have the higher rate. I have the lower rate. I have the difference. I have two NPBs. Now I can comfortably use my formula. I can comfortably use my formula to arrive to my IRR. And just here I come and say IRR is equal to lower rate into decimal 0.12 plus NPV of the lower rate. Ilikuwa ngapi? NPV ya lower rate ni ngapi? Class. NPV ya lower rate ni ngapi? I want you to look at it. Look at it in that angle. Ilikuwa ngapi? NPV yenye lower rate ilipatia. In our case, lower rate tumeona ni 12%. The one that gave us a positive NPV. So ilikuwa ngapi? Ilikuwa ngapi? This is very interesting. Very, very interesting. How much was the NPV for our lower rate? 892. That is very true. 892. 892. Divide by, remember the difference. Difference in NPV. Difference in NPV itakuwa ngapi? Ile ya lower rate 892 minus 3481.63. Minus inakuwa converted to plus. Utajua vile tutafanya. Then this one you multiply by higher rate 0.20 minus 0.12. Higher rate minus lower rate. Sasa si mtu atupatie IRR yetu ni ngapi sasa? IRR yetu ni ngapi? IRR yetu ni ngapi? We would wish to get somebody giving us the IRR of the season. The IRR of the season. The IRR of this company. The IRR of this company. We want to advise the company. We want to advise the company. We want to advise the company. Let's get, you give it as a percentage. IRR is measured as a percentage. Measured as a percentage. Wacha tuone tunapata nini. Wacha tuone tunapata nini. What are we getting? What are we getting? Make sure that unaifuatilia vizuri. Hapa unaweza pata hii ndio itakuwa ya mwisho. Hii ndio itakuwa ya mwisho. Fanya huku. This divide by this, multiply by that difference. Difference I think ni 0.808. Then the last one will be add this one. Niambie unapata nini? Niambie unapata nini? That is very good. 13.6%. 13.6%. Thank you so much. Thank you so much. That is our internal rate of return. Internal rate of return. Now, decision rule, when we're making decision, when we want to advise the company, we check at this, we compare with the rate given by the examiner. The rate given by the examiner was 12%. If the IRR is higher or is greater than the cost of capital, you advise them to accept the project. What am I saying? That if the IRR is greater than the cost of capital that was given in the question, you advise them to accept the project. So just say, if IRR is greater than cost of capital, we accept the project. If IRR is greater than the cost of capital, we accept the project. That is one, acceptance rule number one. Then acceptance rule number two, if IRR is less than the cost of capital, we reject the project. If IRR, for instance, assume that we get IRR of 10%, and the cost of capital provided was 12%, we definitely reject that project. We definitely reject that project. Then the acceptance rule number three, you say, if IRR is equal to the cost of capital, if IRR is equal to the cost of capital, you may accept the project. You may accept the project. So those are the three rules. If it's greater than the cost of capital, accept. If it's less than the cost of capital provided, you reject. If it is equal to the cost of capital, you may accept the project. You may accept the project. That is the way we measure, and that is the way we are able to do the decision, to make our decision, So are we together? Have you understood? Any question? Any question in regard to that? Any question in regard to that? IRR always equate NPV to 0, NPV to 0, the first thing. So the estimation of the rate is just helping us to get a negative NPV or 0. If we could have gotten 0 there, it's also okay. Also okay, either negative or 0. Negative or 0. Kuna wakati unaweza hesabu kute hii umepata 32,000. So 32,000 minus 32,000 get 0. It's okay. Either you get a 0 or a negative. That is our objective. So you can see the higher the rate, it reduces the total present value. The total present value is reduced because the cost of capital is very high. The cost of capital is very high each year. Tuko pamoja? Are we together? Are we together? Are we together? Are we together? Regarding IRR. Tuko pamoja? Tuko pamoja, tuko pamoja, tuko pamoja, tuko pamoja. I would like to know whether we are all together. All of us should be together. We should sail in the same boat. Thank you so much. So I would like you to go and check November 2015 question number 3. You go and check that, try and do it. November 2015 question number 3 before we go to the next part. So remember, we are building up whatever that we'll be doing over the weekend. And over the holiday. Yes. So far tuko na maswali mbili, yeah. We are building up. Have you noted those 2 questions? Hope you have noted the 2. So let's go to the next technique that is known as a profitability index. Profitability index. Profitability index. Profitability index. Remembered something very, very important. Don't know whether it would be possible for me to post this. We have said assignment here in November 2015. So let's proceed. We've said profitability index. Profitability index is our next technique, and it is presented by PI. Profitability index. PI. So you say profitability index will be equivalent to the present value of cash inflow. Profitability index will be equivalent to the present value of cash inflow divided by the initial outlay. Profitability index will be equivalent to the present value of the cash inflow we divide by the initial outlay. Yani hiyo ni rahisi kama tunavyosema. You say just say PI formula. PI is equal to the present value of cash inflow or cash inflow divided by the initial outlay. Then you can say illustration. Determine the profitability index of the project whose cash flow is 21 million, cash flow is 21 million at a rate of 12% with an initial outlay of 65 million. 65 million. 65 million. So we determine the profitability index, and remember what we said, that under profitability index, this is an index, so you equate to 1. You always equate to 1. You equate it to 1. Equate it to 1. So if you get 2 point something, equate to 1. You say it's 1. So you are looking against 1. So you are comparing it against 1. Kama vile sasa kwa our IRR, we are comparing it with the previous cost of capital provided. Now for the profitability index, we compare it with 1. Ukipata maybe profitability index iko juu ya 1, accept the project. Pata iko chini, reject the project. Pata inatoshana, you may accept. Haya, sawa sawa. So in our case, yeah, we have the formula PI is equal to the present value of cash inflow. Our cash flow need 21 million. So it will be 21. Now as I eliminate the 6 zeros, 21 times, of course, you can say this will go for 5 years. Let's add there, add something, just say for 5 years. This one should go for 5 years. Add that, your timing. So profitability index will be equal to the cash flow 1 PV-FAR. This is PV-FAR 12%, 5 years. PV-FAR 12%, 5 years. PV-FAR 12%, 5 years. Divide by the initial outlay, which is 65. Sasa sijui mtapata nini? First of all, we need to get PV-FAR 12% 5 years. PV-FAR 12% 5 years. This part here, ni ngapi? PV-FAR 12% 5 years, so that we get 21 times your PV-FAR 12% 5 years. You can use a table, you can use a calculator. PV-FAR 12% 5 years, napata ngapi? PV-FAR 12% 5 years, 3.6048. Thank you so much. 3.6048. 3.6048. Then this one divided by 65. Now with that, you can give us the PI to 3 decimal places. PI itakuwa ngapi? To 3 decimal places. To 3 decimal places. Haya, wacha tuone. Unapata ngapi? Haya, Salome yako na swali. Nauliza. Haya, Keras already amepata. Salome anatuuliza swali mzuri pale. Why 3.6048? So, if you look at the question here, you have to determine the profitability index of a project whose cash flow each year at the end of each year is 21 million. Therefore, that means that cash flow is regular cash flow. Each year 21 million, each year 21 million, each year 21. Therefore, ndio maana tunaenda kwa hii formula ya PV-FA. If it was not regular cash flow, we could have gone to PV. Salome, umeona hiyo? Ngenda kwa PV. So, una compute 2 PV for 5 years. Na kera sana tupatia 1.1646. 1.1646. Now this one, you are comparing this with 1. Tulisema if it is greater than 1. For instance, in our case, this is greater than 1. Ikiwa greater than 1, this is PI greater than 1, accept the project. Higher, PI less than 1, reject the project. PI equal to 1, you may accept. Wow. Are we together? Pamoja hadi hapo. Pamoja hadi hapo. Pamoja hadi hapo sasa. So in our case, do we accept the project, reject the project, or may accept? In our case, tufanye namna gani sasa? We accept the project. Yes. Accept the project because our profitability index is more than 1. More than 1. We go to the next one, discounted payback period. Discounted payback period. Remember, these are now some of the modern techniques, and we looked at the traditional technique where we had discounted payback. No, we had payback period. Now let's see the discounted payback period. It's in connection with the LTV. We shall see how we discount these. How we discount now, and it will become a modern method, a modern technique of appraising the project. Modern technique of appraising the project. So we have here discounted payback period. Discounted payback period. Wow. Discounted payback period. So I think this we just go direct to the question. We just go direct to the question and see. Can you look at a question in November 2018? Question in November 2018. Vizuri tuko na kila kitu hapa. November 2018. Let's look at that question. November 2018, question number, which question is this? Tuangalie swali namba la pili, namba 2. Swali namba ya pili. So are we there? Are we there? Are we there? November 2018. Kwa pale, tumefika pale ama bado? Ifika pale ama bado? You should be there. Should be there. Let me see whether I can be able to screenshot this. Someone has shared. Kama kuna mtu ameshare, that is very good. Hi. Not really. Screenshot for you. All right. I'm sharing with you, but I think you should be having these papers. I'll not be now sending the papers. You're having the link. So I think I should be giving you time to should download all of them and have them as a file in your machine, so that we be saving much time. So you're saying November 2018, question number 2. So illustration, November 2018, question number 2. Question number 2. Yes, thank you. There's someone who has just shared. Thank you, Keras. Keras, remember you are our rep. So I think that is good work that you are doing. Yes. So any communication, anything that we need to do to these students, kuna tusaidia pale. Sawa. So all of us, wacha tufungue hiyo swali. We see what we are expected to do. Are we all there? Okay, another assignment pale, part A. Describe 4 limitations of the net present value method of investment appraisal. So far we have how many questions for assignments? Kuna question ngapi? Tuko na maswali ngapi so far? Ndio mwenye anafuatilia hapa. So far tuko na maswali ngapi za assignment zenye unaandika mahali? Remember hii assignment, the moment umemess ati hufanyi, hapo ndio sasa utajua mambo tofauti kwa ground. Unajua sasa for the online, unless maybe I don't know, you have to be faithful. With our words. Yeah, 3. Thank you so much. Make sure that you are doing the assignment. So part A, that's another question. Part B, let's look at this. The management of Bundacho Limited is in the process of evaluating 2 projects, namely Alpha Beta. The eliminated or estimated pre-tax cash flows of each of the projects are as follows. We have here Project Alpha and Project Beta. Additional information. Project Alpha costs 3.8 million and has an estimated lifespan of 4 years. That is very good for the examiner. He or she has given me the initial outlay for Beta. Is it Beta or Alpha? Alpha. Initial outlay 3,800. 30 eliminated. Then useful life. This information is important for me. Your information is muhimu sana kwangu. Project Beta cost 8 million with an estimated lifespan of 6 years. So Beta nayo ini Alpha Formation ya alpha, beta nayo imeambiwa iko na initial outlay ya 8. Initial outlay ya 8,000. No worries. Then years, useful life of 6 years. That is very good for me. Both projects have a 0 salvage value, no salvage. An investment in working capital of 825 would be required irrespective of the project to be undertaken. So each project will be having a working capital ya ngapi? Working capital is 825. So hii inakata close 825. That is the working capital. The cost of capital for the company is 12%. The corporate tax is 30%. Using the discounted payback period method, recommend to the management of Budacho Limited on which project to undertake. Now we want to recommend to this management on which project that they should undertake. Which project they should undertake. The life, useful life ya project ya kwanza ni 4 years, na hii ingine ni 6 years. So I think we can start with the project alpha. Project alpha. Project alpha, we have year 1, 2, 3, 4. Shillings are in 1,000. This is very interesting. Now we are given earning before depreciation and tax. Earning before depreciation and tax. Earning before depreciation and tax. And the first one ni ngapi? 2590. 2590. 590. Next one 2880. Ipatieni hiyo ingine ya 3. Ya 3 ni ngapi? Ya 3 ni ngapi? Wacha tuone wenye wanafuatilia. For sure, give you a break of 4 minutes. Aha, ya 3 ni ngapi? Ya 3 ni ngapi? Just check from the question. Check from the question. Ya 3 tumepewa ngapi? Wamesahau. 30, 50, and then we have 25, 2950, 2950. Thank you so much. Anytime you have such pre-tax, naona sasa exam na hapa alitumia jina ingine tofauti tu, but so it's the same. Earning before depreciation and tax, pre-tax cash flows. Examiner is a very wise person. Sasa, what we want to eliminate, we want to eliminate tax kwanza, less tax. Na tax rate ni 30%. So utaweka 30% ya hizi zote. So we are having a break of 4 minutes. You're having a break of. So I think we can proceed. And then we get our taxes so that we're able to eliminate. Now give me the values very fast. What is 30% of 2590? 30% ni ngapi? Thank you. Next one. Let's move very fast. Ya pili. Thank you. 864. Next one. 915. That is very good. The last one, 885. Thank you so much. Now, we add back DTS. Niliwaonyesha kutumia DTS. So to get our DTS for this is equal to cost minus salvage, or if you have salvage, divide by useful life. This one you multiply by the tax rate. So it will be, for the first project, we are dealing with alpha project. So ni 3,800 minus 0 divided by 4 years, then this one multiply by 30%. Nipatieni hiyo na ndio tutatumia throughout. What is our DTS? Hiyo ni kama 3,800 divided by 4 times 0.3 times 0.3. We add back DTS, depreciation tax sheet. Tunapata ngapi? Tunapata ngapi pale? Tupate a figure. How much? That's 800 divided by 4 times 0.3. How much are we getting? Tunapata ngapi? Bado hajapata hiyo. Let's engage our calculators. $285 from Liz. 285. Very important for me. So you add 285 throughout. So give me the cash flows here so that we're able to discount them. Cash flow for year 1. Yes, for this year. Napata ngapi cash flow? Thank you so much, Salome, Liza, asanteni sana. Tupate hapa ya year 1. Tupatie. Chukua mwaka yako, tupatie tafadhali. We need to finish up the 2 so that we're able to advise. Now, how will we be able to advise if we have not finished? 2398. 2398. Thank you. Kama umefanya year 4, tupatie y is equal to 2098. 2098. Sasa sijui. Okay. Sijui kama hiyo ni ya kwanza ama ni ya pili tumefanya hivyo. Pepe hii mzuri. Naona Salome year 1 2098. Thank you. Sawa. 2098. Thank you so much. This is Diana. Thank you so much, Diana. You're doing great. Next one, year 2. Year 2, year 3, year 4. Someone to compute 2301. We are moving. If you see no year, know that we are moving. Vizuri. Ukiona mtu hajaweka mwaka, jua anafuatanisha vizuri. Lakini akiweka mwaka year 4, ameruka huko. Na ni vizuri sana. He's saving our time. 2420. Moving on well. Ya mwisho ngapi? 2950 plus 285 minus 885. 885. Napata how much? 2350. Plus, why can't you discount for me this? Discount for me, get PVF 12%. Of course, these cash flow are irregular. Unaona kila mwaka. So PVF 12%. Pata hii. Si ni the same na zile PVF tulipata za 12. Si tulikuwa na 12% somewhere. So is it 0.89 something? I think ni hizo. 0.8929. Yes. 8929. Ni hizo. 0.79. 72. If I can really remember 71, 18, 0.60 what? 60 whatever, 55. 60 what? 63.55. Wow. Wow. Let's get the present values. Present value, you compute, you just multiply this. Multiply this. Present value of cash flow. Sasa hizi ndizo tunataka. Ya kwanza tupate hii tata 1873.3. Thank you so much. 1873.3. 1873.3. Next one. Next one. Next one ni ngapi? Next one ni ngapi? Next one ni ngapi? Yeah, 4. Thank you so much. 1493.4. 1493. That is very good. 0.4. Songe tukisonga. Songe tukisonga. Nani ameshikilia ya 3? 1834.35. 1834.35. You na assume tunasonga hivi. 1834.35. Kuna mwaka jua, tunaenda in a chronological order. Nafuata hiyo order. So, pate sasa yenye napata ni ya 3. Whatever. Ya 3 class tunapata ngapi? Remember nataka tuende hiyo project ingine nyingi mtafanya. Yote. 1722.6. 1722.6. Concentrate kwa hii because hiyo ingine nyinyi ndiye mtafanya. Alafu tu compare to advise hii kampuni tuambie which project the best to undertake. We should concentrate here. Now, class, we don't look at the NPV. Huwa tuangalie NPV sasa. Tunachukua hizi values, hizi cash flow, present value of cash flow zote ndizo tunakuja tunafanya aje? Year 1 2 3 4 cash flow. Inaonekana hapo? Kani hapo vizuri. So unakuja unasema year, yes, 1 2 3 4. Then cash flow zetu, of course, 1000, 1873.3, 1873.3, 1834.35. Then tuko na 1722.6, kuna 1493.4. Then now when you are using the discounted, the payback period, already, why are we calling it discounted? Umeona, we have introduced a discounting factor here. Sasa already tumeifanya discounted, idio term. Sasa hapo pengine tunaenda kwa payback period. Nani anaweza nikumbusha? These cash flow zetu, are they regular or irregular? Are they regular or irregular? Are they regular or irregular? When we were discounting, when we were finding the payback period for irregular, tulikuwa tunapata cumulative of cash flow. Are we together? Do you remember that? Do you remember that? Cumulative of cash flow. And remember, what we want to get at the end. What we want to get at the end is what? Nataka kupata nini? Our initial outlay. And then I would like you to look at this initial outlay. Tunataka tupate the total initial outlay. Cost ni hii. Cost ni 3800. Cost is initial outlay computation. Initial outlay. Yeah. This is very good. We have cost. Kwanza 3800. Then you have to add any other incidental cost. Incidental cost including the working capital. Tuko na working capital. Working capital. Yes, we had a working capital here. We had a working capital of 825. So unaona kwamba tunaongeza hiyo tupate our initial outlay. Ni ngapi? Initial outlay for that project ni ngapi? Usisahau hii. Don't forget this one. Initial outlay ni ngapi? Sasa total ya hiyo itakuwa 25 40. This is 646. So we want to get to that point. We want to get to that point. Sasa niambieni, hadi hapo tuko pamoja? Are we together up to that point? Have you understood what we are trying to do? Have you understood what we are trying to do? Have you understood? Nataka kila mtu aniambie kama umeshika. Muhimu sana. Muhimu sana. You can see the marks given here, 8. Imagine umescoop 8 marks. Toka kwa swali. So are we together? Are we getting the concept here? Are we getting the concepts? Are we getting the concepts? Usikue kwa fence hapana. You should get or not get. Two things. Now our initial outlay is 4625. So I know that I'm accumulating to arrive to this. Once I get that done. So the first one is 1873.3. What about the second one? I add this to this. Ya pili itakuwa ngapi? Tupate hiyo. Ya pili itakuwa ngapi? Let's see. How much are we getting? Tunapata ngapi? How much? Addition. 3707.7. 3707.7. Then we go to the other one, the third year. When you add the third year, ikivuka hii, that means sasa hapo ndio tunasimamia. Ikivuka, juu hatutaki ivuke. Ongeza. Hiyo ingine inavuka 4625. Ikivuka our initial outlay, tunasema sasa that's the year that we should stop at. Because that is the year that will give us the total. We shall be recouping our 54. Ishavuka. Therefore, remember what we said, you pick your initial trade ili usikosee, unaweka 4625 ndio our initial, na unasema this is the year helping me, then you get the remaining amount. Remaining amount ni ngapi? Hapa. Yenye imebaki ili tufike hapo. Remaining amount ni ngapi? Wow, this is very interesting. Remaining amount ni ngapi? 4625 minus 3707.917.3. 917.3. And then we said the formula of this, now the payback period. Payback period will be equal to full year 1, 2. Those are the full year 2 plus the remaining amount 917.3 divided by whatever that has really helped us to cover that. Tunapata ngapi sasa? Miaka ngapi? Ni miaka 2 points to 1 decimal place. 1 decimal place is okay. 1 decimal place is okay. 1 decimal place is okay. 1 decimal place. Tunapata miaka ngapi? 2 points. Wow, this is very interesting. Please never forget to add. If there is another cost, for example, working capital, this cost, usisahau kuweka kwa your initial outlay. Ukisahau utakuta kwamba sasa ungewaki na 38, so your difference ingekuwa kidogo, so whatever that you estimate would be wrong. How much are we getting? So that is 917.3 divided by 17.2, 2.5. Thank you so much. 2.5 years. 2.5 years. 2.5 years. Are we now able to do that under project better, and then you compare. Remember what we said, the lower the payback period, the higher the, or you accept the project, or the better the project. The lower the payback period, the better the project. So let's do that for project better. Is that okay? Is that okay? So we are taking the next 10 minutes to do for project better. Let's see who will be the first one to give us the payback period, discounted payback period for project better. Thank you so much. This is very interesting.